Yo guys, what's going on? It's Lewis here, and I'm coming at you all the way from Colombia. So this is a traveling edition of Checking the Markets, and I'm going to be traveling quite a lot. And currently I'm in Colombia. Next up, maybe Peru, maybe Mexico, then eventually Bali, and I'm doing like a little bit of a world tour, but I'm not going to stop making these updates. I got a really cool travel makeshift video, not like podcast studio thing or whatever. It's literally my microphone. Like there was something that I could plug it into the computer. So that's awesome. I don't need this huge rig. All I need is my microphone and my little Manfrotto, thing. So anyway, we got to go over the markets because things have been going absolutely nuts. Things are up so much, and there's many different things about this. First off, if you know me, if you've been watching my content, if you're part of my Discord group or anything like that, you know that I always have been saying for literally basically a year and a half that you need to have two accounts, okay? You need to have at minimum two accounts, a long-term portfolio and a trading account. And I've been saying for quite a while now, you need to have that long-term portfolio account be bigger as the prices get lower. You want to make sure that that long-term portfolio account that you don't touch, you just put money into it, not financial advice, but this is what I do. And I just put money into it and I just don't touch it. And I just wait and wait and wait and wait and wait. And basically they either go to zero or they, go to Valhalla and do really well. But typically, things bounce back and things end up coming in profit, even if you need to wait a very long time, which is really annoying. So I have my big investment account and I try not to touch that. And then I have my trading account, and things weren't looking, honestly, they weren't looking like the best before, but after we got this huge candle, there was some room to go up, and then obviously we just rocketed up with I think 30% or something like that. So now it's like, well, what do we do now? Do we just FOMO in right here and hope that we go to 48K with no pullbacks, or what? And this was a big issue that I used to have like all the time. First, I didn't know what to do. So when I saw big God candles like this, I would simply just FOMO in. And a lot of the times, if we were in a full-blown bull market, it would work. Even if it went down a little bit, it would just pump right back up. And then what I started to do was, because I started losing when I would do that, I started just putting in half of my position or a quarter of my position or maybe a third of my position just immediately, just like market buying, just so I don't have that FOMO anymore. And then I would put the rest of my position in lower down. But now, after getting better at trading and learning more about trading, what I do is I'll look at this, and let's go to Ethereum for this because it's a really good example. So what I'll do is I'll look at Ethereum and I'll say, oh damn, it just like popped up it's popping up and it's doing really well. Should I just buy right now? And this is on the weekly chart, right? So what I'll do is I'll look at this and I'll see if there's anything that's giving me any hints of like, what do I think I should do? And I'll explain that to you right now. So in regards to this, what do I see? Well, I see that, obviously we had this huge impulsive move and then this super bearish candle, which ends up being like a wick. And if you combine these two, and then we, had this consolidation, and finally we fell down. I honestly thought that we were going to fall lower. I really thought that we were going to hit like at least 1500 like one more time, or maybe sweep these lows, but we never did. But what do I see? What do I see now? Well, what I see is that we had, this was the bearish order block, and because it was the up move for the down move that broke this market structure, and then we tapped it, and then we had another down move that broke this market structure. So now this is the bearish order block, and we never actually tapped it, never came up to it. But then what happened is all of these candles started getting smaller. This one's bigger, but it's still relatively small. Like it's not something like this. And so the candles were getting smaller. That was a hint that things were getting bullish. And then we had this huge bullish engulfing candle. That was pretty bullish. And once we started to come back down and this closed down here, initially I was thinking that this is bearish because this creates another bearish market structure break right there, right? But what do you see is that this is actually a sweep of the low on the weekly time frame. And even if you thought to yourself, okay, well, this is bearish on the weekly time frame, if you go down to the daily time frame, you could see that this is a pretty obvious, pretty obvious sweep of the low right here. And even going down to the 12-hour, this is a hammer candle. So you got a sweep and a hammer candle. So that's pretty solid at the lows. But regardless, I didn't even catch this. Because I was like waiting, right? And what I do now, or what I see now, is that we actually ended up popping up. And what do you know? We had this market structure break right here. So this was the up move for the down move that broke this market structure, right? So this becomes a bearish order block. But once we closed above it, now it's a bullish breaker. So it's a weekly bullish breaker right here. This candle. This right here is a pretty long wick, so I'll take it from here to here. Sometimes you could choose to do the wicks, sometimes you could choose to do the candles. Usually I do the candle bodies, but in this one it works. This is just what you do. So you say, okay, I'm gonna get in on a retest of this weekly bullish breaker, but look at this. On the weekly time frame, nothing happened on the weekly time frame. You missed it. But if you go down to the lower time frames, so this is the daily time frame, you could see that the price actually came down and tapped the weekly bullish breaker on the daily time frame, and not only that, but it had a sweep of all of these lows. So it had a sweep of all of these lows, and it tapped the weekly bullish breaker. That's good enough when the things are so bullish to actually enter into a long. So you could, this was a long opportunity right here, because this was a bullish candle with a sweep into the weekly bullish breaker, which is really good. But even if you missed that, it's like, well, what do you do now? Because now it's keep on going up. You're like, well, it's just not going to stop, right? So you could use the daily, and you could say, okay, well, this right here is the down move before the up move that broke the market structure. So you could go like this and then bring this to the right and say this box is the daily bullish breaker, and you want to wait until it comes down here, somewhere around here, and then puts in bullish market structure, and then you can long it right there. Or you could go into a lower time frame, and this is what I was talking about. This is what I started doing, is I started going to lower time frames and lower time frames and lower time frames, because if things are so bullish, you don't get an entry. You simply won't get an entry on the weekly. That's pretty obvious. And you simply won't get an entry on the daily either. Sometimes you won't get an entry on the 12-hour, and you need to go down to the 4-hour or even the 1 hour in order to get an entry, unless you just YOLO in, right? So I go down to the 12-hour, and what do I see on the 12-hour? Well, I see that we have this right here. This is a down move before an up move that broke market structure right there. So, and even if we count this as the top, it's still broke it. So I like counting the bodies, not the wicks. But regardless, it broke the market structure to the upside. So now this is a 12-hour bullish order block, right? So I'll just put this, I'll tag this as the bullish order block, and I'll say, okay, so we have this 12-hour bullish order block right here, which you can't see on the daily, right? Look on the daily, you can't see it. But on the 12-hour, you can see it. So I'll start stacking in my orders, here. I'll do a stack from right where it starts down to the bottom, down to where the daily bullish order block is. And then that will hopefully be able to get me filled, as opposed to just buying and buying and hoping and wishing and everything like that. So, and if I want to get even more granular with it, I could go down to the 1 hour, and go down to the 1 hour. What do I see here? I see it looks like we're okay. It looks like on the 1 hour. First off, we have this bullish ascending triangle in an uptrend after consolidation, after a pretty long consolidation, and we have this down move for so this technically this is technically like this is a bullish order block, although this is like the 1 hour, and I am a little hesitant. The thing is, I'm just a little hesitant to like just jump in like on that time frame, like so low of a time frame, like right now, because I would like to see a pullback, but we might not even see a pullback. Or heck, I could say that okay, we had this. We're getting a breakout. We're getting a breakout of this triangle, and that's a bullish, and this is a bullish market structure break. So you could say, okay, I'm going to play the breakout of this triangle. There's a lot of different ways that you could play these things. It doesn't have to just be like, the weekly or the daily or even the 12-hour. You could go down into the lower time frames to figure things out. For me personally, I like this area right here, the 1800 area, 1800 to 1830. But if we get a pop up, if we get like a little pop up and it closes like here, okay, maybe I'll just try to get in on this, like right here. If we close higher, and I'll just try to get in on a retest down here, and then I'll have a stop. You can put your stop right there, and that makes a lot of sense for that trade. And then if you get stopped on that trade, then if it comes down here, you could start buying and start stacking in down here. It's really like you have to figure out your own style and what works for you. Ideally, though, obviously, you just get in you just buy down there and you just wait, But regardless, I hope that helps in terms of like, what do? Do you just buy right now? Well, you could, no, but like I'm telling you, like what I do and what helped me is to go into the lower time frames, look for trade setups based off of candlestick patterns, based off of chart patterns, and just see what things look like on the lower time frames, and try to get an entry that way, so that I'm not like FOMOing in at the top by accident, something like that. So with that out of the way, I think we can get started. So I'm going to start off with the total market cap, and then we'll go to the dominance levels, Bitcoin, and then Bitcoin, Ethereum. Bitcoin and then Ethereum against Bitcoin, and then Ethereum against USD, and then we'll do Link, Solana, and a few others that I want to do. So INJ, XRP, FTM, and Rune. Those are a few of the ones that I want to get through. And if I still have time after that, because I want this to be just over an hour, I want this to be an hour and 15 minutes, then we can keep on going. So let's get to the video. Okay, so first things first, let's look at the monthly total market cap for all of crypto right now. And as you could tell, October was Uptober. That's what it was. And now November is and this is really bullish. This candle right here is an extremely bullish candle for the month, because there's no wick. So if it looked like this candle with a wick, or if it looked like this candle with a wick, or this one with a wick, then that would be that would not be super bullish. But this is super bullish for the monthly candle to close like this. So that means that a lot of money was brought into the markets, and the total market cap of every cryptocurrency is definitely going up significantly. So and it's looking very, very positive. So things are looking very good on the monthly time frame. We had let's go back to it. and see if there's anything. Basically, we had a market structure break. So obviously, just broke this one from the close, from the body, or even this one now from the very top from the wick. So there's been market structure breaks. So you don't trade on the monthly; you just use the monthly to gauge what the market's doing. And obviously, we broke out of this huge trend line from April. So April, May, June, July, August, September, and then so 6 months, and then we broke free of it, and then finally we had this nice blast off with increasing volume. So that's also a pretty good indicator that this is a legit rally. We probably won't get a huge pullback, but pullbacks do happen eventually. They do happen. So we have to look out for like where we're gonna go. And this is like exactly like what is going on with what I explained in the beginning of this video, in the intro of the video. There's too much. It's just up only. So it's like, where do you get in if it's up only like this? Well, you could go down to the daily time frame first to see, okay, well, here's a move, and then okay, it popped back up above it. So what can you do? You could say that you want to get in here, and wicks. This is actually really bullish. Yeah, this is super bullish. All of these wicks just coming straight down and then getting bought up. So the market cap, the total market cap for all of cryptocurrencies is growing quite rapidly. It does not look like it's slowing down right now. So I would not. Okay, so this is annoying because I literally just sold a bunch of crypto of my leverage positions because of the possibility of where we are, of where Bitcoin is. But the total market cap in general looks super bullish. So we had this huge run up, followed by this bullish ascending triangle. So we got that right there. Okay. And then obviously we broke out of it. So we broke out of this ascending triangle. So, if we do get a pullback, the likely scenario is that we'll bounce off of this ascending triangle. And you could see this was a resistance, obviously, from the chart itself, but also I pointed out this was the 23.6 fib resistance. So if we go back to the weekly time frame, this was also the previous resistance. So previous resistance, what does that do? It turns into support. So yeah, I would say that this would be I don't know if we're going to get major pullbacks. But one thing that I am going to be doing in this video is I'm going to be going over different charts and plotting out the fib levels for them and putting in alerts to make sure that if they do come down to the 61.8 golden ratio, I will get into them. This is especially true for things like Solana and other coins that went up significantly, because that is a way that I traded that worked super well before. So we're going to see if it works well again. So anyway, total market cap looks really good, and it does not look like it's slowing down anytime soon based off of the close, based off of how these candles closed so high to the very top. Now, even going all the way down, from the monthly to the weekly to the daily, everything looks bullish. They all look bullish. I'm not seeing any bearish indicators. And now what we'll do is we'll go into the dominance levels, and once we get into Bitcoin, what we'll do is we'll talk about how things might come into big resistances, but that doesn't mean that you should automatically sell. And this is something that I learned from automatically buying at big major support levels and then getting crushed when it would just fall right through it. So now I go into the lower time frames and I check the charts for price action that tells me what's going on. And so that's what I'll explain when we get to Bitcoin, because it is at a big resistance right now. Okay, so now let's go into the dominance levels, and we'll start off with Bitcoin dominance. So as I've been saying for quite a long time now, Bitcoin dominance, it broke out of this multi-year range to the upside, and then it retested it, and it doesn't look like it's slowing down anytime soon. We're probably going to get to that 60% mark because, or let me do this. Yeah, we're probably going to get to that 60% mark. And at that point, that's the 61.8%. So this is probably going to be the best time. I don't want to say this is going to be the best time to get into alts, but if it comes anywhere close up to here, then I would think that it would be a really good time to get into alts because the dominance levels, they don't really work exactly how you would think they would. It's not like, oh, okay, just buy Bitcoin because Bitcoin's going to outperform everything and it goes up, and sell Bitcoin when it's up here because alts are going to outperform everything. Yes, that is the general rule of it, but I just noticed that it doesn't always work like that. So, but if you take it into account and then you take in the other things into account and you put them all together, then you get a pretty solid understanding. So, and can come up with a good game plan. So that's Bitcoin dominance, and this is altcoin dominance. So this is the inverse of that. And as you can see, altcoin dominance has been, just absolutely terrible. It's been falling and falling and falling and falling ever since November of 2022. So literally for the last 1 year, 365 days, alts have been absolutely getting demolished. And let's not kid ourselves, they've been getting demolished since basically November of 2021. And if we're really being honest, most alts, a lot of them, went down starting in May 2021, and that was the high for the alts. Yeah, there were a few that went up in November 2021, but ever since then, they've really been going down. And this is why the alt dominance is sort of a fagoozy. It sort of isn't really like, you can't just count on this because like this definitely screwed me a little bit. When I would buy alts, I'd buy alts down here. I'd buy alts, at the support of the alt dominance, thinking, oh, well, the dominance level alts is going to go up, so that should raise alts. But this was really just a bunch of insiders and people just creating meme coins and stupid, coins on Uniswap and shit. So or something, because obviously, if you look at most coins versus Bitcoin, they've just continued to go down ever since pretty much May, or at the very latest November of 2021. So this is the altcoin dominance chart, and I'm looking at it on the weekly, and like I said, if it does come down here, this would be most likely where we could get a true alt season. And I'm not talking about like 100% gains or 200% gains or even 300% gains. I'm talking about maybe we get like some 5x's, maybe we get some 10x's from here to here. That would be incredible if that happens. So that's what I'm really, really hoping for the most part. I mean, right now, I have a lot in my trading account. It's mostly Bitcoin and Doge, only because I'm playing the fundamental play for Dogecoin for Elon Musk. But I will explain to you that in a minute. So yeah, this is the dominance levels, and basically if this does start putting, let's say it puts in a double bottom, or it's like, let's say it puts in double bottom like this, okay, and then puts in like some bullish price action, and then it comes above this trend line right here, okay, maybe alt season is going to start. Maybe that's alt season, right? But until that happens, most alts are still going to get crushed by Bitcoin. And that's what's been happening, except for, like I said, Solana, Link, INJ, and a few others. So we have all of this, right? And what you could do is you could also look at, there's the 50%. So this might be an area down here that's a probability. But until we start seeing some bullish price action, I can't really get super bullish on alts. However, there's always oh, hey, well, look at this. On the daily time frame, we have this move up right here that broke the market structure of this. So, alt dominance is turning up right now. Based off of this little thing right here. Most of the time, what you want to see is like a move up and then like a move back down and then like another move up, something like that. So like maybe it'll move up and alts will outperform, and then it'll go back down and then move back up. But for the most part, obviously altcoin dominance has been going really far down. I wouldn't be surprised. I wouldn't be surprised to see alts, make a move higher, just because of the strength that we saw Bitcoin have, and then maybe Bitcoin will cool off a little bit. But and like I said, right now there is an opportunity. So I will be looking at a lot of alts. There's definitely opportunity right here. We have, I mean, it's in the bullish order block, and even if you go down to this 12-hour, you could do this, and I mean, that makes a lot of sense. This was a hammer candle with the sweep of these lows before the move up and creating the bullish market structure break, followed by the retest. So yeah, I'm definitely going to be looking for longs in altcoins, and but I'm not. You don't know, you don't know if this is going to be alt season and everything's going to go absolutely crazy or what. But I do think that the best situation, or the best price for dominance, the best percentage for dominance that will give the highest chances of a true alt season, is if we reach this 61.8 down here at the 40% level. So yeah, that is dominance levels. All right, so now I'm going to go over the dollar and then equities, because this is really interesting. So the dollar, it had this huge rally, and let's say that this rally was from July 17th all the way to October, basically the end of September. So July 17th to the end of to the end of September. And look at Bitcoin from May, June, July 17th. So here was July 17th, and September, here was the end of September. So right here. So basically from here down to here, the dollar was rallying, and then you could see that Bitcoin, after that happened, Bitcoin shot up while the dollar was going sideways for the last 4 weeks. So this is showing a really big correlation with the dollar. As the dollar weakens, Bitcoin goes up. So now we have to see if the dollar is going to fold and it's going to go, crash below here, or if it's going to, make a higher high and continue moving upward. If we go to the daily, this is not looking very good. Look, it had it move up and then boom, big move down. So it broke the market structure to the downside right here and right there. So broke the market structure downside, came back up, retested, and fell back again. Had another bearish market structure break right there, came up. So it's trying. It's like it's trying so hard, but it's really not. And even just yesterday, long wick candle with the SFP, with the swing failure right there. So it's not looking very good, the dollar, I gotta say. And so if the dollar is not looking good, then maybe Bitcoin has a lot more room to run. Maybe it's going to go all the way up to 48. If the dollar turns over from here, then that's like going to be pretty crazy. You could see right here, I just noticed this, like at 107, like this is where I said once it hits here, this is when I wanted to gig along. I really wanted to just gig along Bitcoin and crypto and just forget about it, because I figured that the dollar was going to actually come up. If we go back to the weekly chart, I figured the dollar was going to come up to this level right here, at least, and before falling down. But it looks to me like it is not wanting to go above this bearish order block, this up move or the down move that broke the market structure. It looks like it's not wanting to go above it. So this right here is the bearish order block right there, that it's just not going above. So with saying this, the dollar is looking pretty bearish, and I would look to continue to long. Bitcoin is still the dominant player in crypto. So I would look at Bitcoin first, and then I would look at other coins relative to Bitcoin, and I would look at their charts against Bitcoin, and I would see when the price comes down on that chart to switch my Bitcoin into those altcoins. That's what I would do. Okay, so now let's take a look at equities, especially the S&P 500. So this is actually sort of crazy that this worked out. This is nuts. I drew this out when this happened, all the way back down here. So like months ago, right? Or a month and a half ago, yeah, September 18th. But yeah, this looked like a Head and Shoulders, and I did the traditional retail Head and Shoulders pattern with the measured move from the top to the bottom, from the shoulder, from the neckline to the head, and then from the neckline down. And look at this, it literally tagged it perfectly. That's nuts. That's so cool. So sometimes traditional retail stuff does work, I guess. But we have this, and now obviously it bounced, and this is looking really nice. This is crazy. The crazy thing about this, though, is that this is the weekly time frame, right? And we all know what happened to Bitcoin over in October. It went up like 25, 30%. But look at what happened with equities in October. It started October up here, and it ended October pretty much here, I guess. So it's down. It's down for the month of October while Bitcoin is up. So the fact that there's this decoupling of equities and Bitcoin means that someone knows something about Bitcoin that's really big, that's behind the scenes. And I would not want to fade that. I would not want to go against that. They're obviously loading their bags super, super hardcore. And they have a lot of money to do that, because if Bitcoin continued to go up while equities continue to just tank, that is so big, right? So now we have, the Head and Shoulders has played out, so we don't need this anymore on this chart. So what do we do now? Well, basically, this was a very, very big resistance area, support, resistance, fake out, resistance right there, tapped it, more resistance, and it flew up, and now it came back down, and it acted as support. So it acted as support, and now it's bouncing up. So I would assume that this is the new support. So what I would do is I would simply just scroll back, and I would say, okay, well, this was the resistance, like here, and now you got to draw in. Now you got to draw in this big rectangle, this big green rectangle, because now it is support. So just do that. And unless we fall back down underneath of here, then it's pretty much going to be up only for equities. So damn, up only for equities. Bitcoin total market cap is looking really good. The dollar is looking weak. So now we also have confluence with S&P 500. So if we have this, damn, yeah, I gotta be long. I want to long. I'm gonna definitely be looking for longs, and I don't think we're gonna get a pullback to the 61.8 on a lot of these coins. I think we're gonna get to the 38.2, and that's gonna be it. But yeah, things are looking bullish, man. Like there's a lot of confluences that are adding together to create a really good trading environment. So especially now that we have this, let's go down to the 12-hour real quick and just see what this looks like. I mean, this is a clear, break in the market structure. So this becomes the bullish breaker. We tagged it, moved up, and then had a big impulsive move. If we come back down, this is now really, really big support. It's the bullish breaker, it's the bullish order block, it's the big support from the whole big high time frame. We got everything. We got a lot of stuff going. So I'm long bias. I'm definitely long bias, and I'm definitely not short bias. That's for sure. I will not be shorting. So yeah, that's the S&P 500. That's equities. Okay, so now let's go into Bitcoin on the high time frame. We'll look at it on the monthly chart. And I'm looking at on the monthly chart, right now, and it looks like it looks like this move right here is going to be the same as this move back here. And this move back here, it topped out at the 61.8 from the very, very top to the very, very bottom. And so if you look at this move from the top to the bottom, you could take the fib, and the fib right here, start right there, go to the bottom, and it's right there. Where's the 61.8? The 61.8 is right here. So that is at $48,000, just over. So it's looking like that's going to be where this is heading. Obviously, there's no, you don't know until you know, but that's definitely where it looks like it's heading. And then, after that, 60,000. So I definitely think there will be a retrace from right here, from 48,000. I was thinking there was going to be a retrace from right here, because if you take the fib from the top to the bottom of this leg down, this is actually the 61.8 fib of this move, plus is the 38.2. And you know what? We still might get a retracement, despite how bullish everything is. We still might get a retracement, but this is really, really important. And I was hinting at this lesson that I want to share with you from in the beginning of this market update, which is that you might have a level that looks so obvious to either go long or go short, but the price could just go straight through it. It could literally just pump directly through it. And this level for me right here at $36,000, this was the level for Bitcoin that was so obviously a resistance. It's the 61.8 and the 38.2 fib. It's the SR flip level from right here. It's going to get rejected from here, right? No, not necessarily. Look at this monthly candle. It's so big and it has hardly any wick at all. So it's super, super bullish, this monthly candle. Take into account everything that we just talked about with the dollar, with the S&P 500, with all of that, and things are looking really good, right? So this is the monthly chart, and so yes, we're in this resistance area, but I'm not going to short it. I'm not going to blindly short it, and I'm not even going to blindly sell. I'm going to wait until I see something on the lower time frames that's indicative of the price turning over and going lower. But right now, there is nothing. There is nothing that is showing me that. So that's Bitcoin on the higher time frames. So really, next stop is 48K. And if we go down to the lower time frame, now we could go down to the lower time frames and we could start checking for things. So let's go down to the lower time frames and see what's happening. Well, we had this huge impulsive move up, and this is what happened. We had this was the fake news, right? So we had this big fake news come out, and then we had this consolidation, and then boom, back all the way back up to the top of where the fake news was. And then it just ran up. So this right here, this consolidation, once this happened, this became an area of interest to get into, but obviously the price never came back down and tapped it. So you never really got a chance to get in down here. But once this came down, and then this, I don't know what this music is, but once this happened, now you have this area, which is the bullish order block. And that's where you would get in right, at any of these areas, at any of these wicks down here into this bullish order block. That's the key. And, now we had this huge wick right here. And now we had this consolidation that's become an ascending triangle that's bullish. So an ascending triangle bullish underneath big resistance area. Who knows what's going to happen. But if it comes down to right here, for a retest of this bullish ascending triangle, then yeah, I would love to. This would be the area where I would get in at 35, basically $35,000, because right here, it's already went up. So maybe on the lower time frames we could see something happening on the lower time frames. Okay, so if we go down to the 1 hour, so there was nothing on the 12 hour except for this right here, right? And then nothing on the 4 hour. But if we go down to the 1 hour, we can see that we do have this area right here. So this is another, honestly, you could do this. You could say that this, technically, this right here, or you could just use this one to make it easier. You could say this right here is the bullish order block. It's a down move before the up move that broke the market structure, either if you're using wicks or if you're using candle bodies. So now what's the next move? Well, you would get in here and you would get in right there. Stop goes down here, and you would simply just try to ride this up to as long as you can, maybe looking left, maybe there's another move. Okay, so maybe right there, and you would get out at basically $36,666, and that would be the next move. But now it's already up and it already tagged it. So what do you do now? Well, honestly, you could go down into the lower time frames and you could simply try to get in, or you could just do this and say, okay, well, what's my RR? Well, my RR it's a 1.5. Things are looking really bullish. It's not a 2R, it's not the best R, but it's decent enough, and given the circumstances, it's a good enough trade to get into, right? So that's something that you could do. And what you could also do is simply monitor this and just monitor this. And if you start seeing a ton of wicks just pop, oh, this is not what I wanted. If you just start seeing a ton of wicks popping up to the upside, like over and over and over again, then yeah, you could say, okay, well, things are actually not looking as bullish as what I thought. So maybe I'll just, get out. But yeah, unless you start seeing, a ton of wicks that look like this, in this area, in this resistance area, then it's still bullish. Like this is still very, very, very bullish. So yeah, I'm looking for longs, and I would just enter long and hope for continuation from this bullish order block right here on the hourly chart, because like I said, go to the 4 hour. What do you have? You can't do anything on the 4 hour. The 4 hour, the only thing that you have on the 4 hour is this ascending triangle, or if you want to call it, basically, ascending triangle. And at that point, like, is the price going to come down, 2.5%? It might, it might come down 2.5% and tag it. But given how bullish everything looks, I'm not totally convinced. I'd rather just say, okay, well, this right here was the bullish order block. It tagged it right there, and now it's moving up again. So the only other option is like this. This is really the only other option at this point. And so, yeah, that's what I'm doing for Bitcoin. But really, this area is very, very dangerous. So I'll have to just keep on looking at it. And if I happen to see something that goes like this, if I happen to see something that's like that, then I'll say, okay, well, that's actually like really bearish. It had the bearish market structure break right there, and then it had a retest, and then it had another, and now it's in a full-on downtrend. So I'll try to, get out. Or if I see some huge bearish engulfing candle that's like really bad, there's a lot of different things that you look for. But what I'm seeing right now is no bearishness whatsoever at all, like zero. Even the RSI and the MACD, they've been oversold, and they're just continuing to just absolutely tear it up. And some other things that you could have done, you could have noticed, is that, say that the price, rocketed up and you missed this whole big move. Well, what do? Well, go down to the 12 hour and you say, okay, well, I don't really see anything here. So go down to the 4 hour. Do you see anything here? No, I don't really see anything here. What, go down to the 1 hour? And sometimes you just have to keep on going down and down and down and down until you finally get something, right? And so, okay, here's the 1 hour. Here's the 1 hour bullish order block, down move for the up move that broke the market structure right there. So once this move happened, you would want to get in. So you want to get in at this bullish order block. So you'd get in here, and that would be your trade. Get in here, stop goes underneath here, target up there, and you would just wait. So that was one thing. Then maybe you missed that, but maybe you missed it. So you have a sweep right here, move down. You think it's bearish, but then it moves back up. So then it's bullish. So it's actually a 12-hour sweep if you look at this. So you look at the 12-hour sweep right here. Nice bullish candle, sweep of the lows into the 1-hour bullish order block. That's a long. And then you could, right here, this becomes the bullish order block once this breaks the market structure. So then you would use this as the bullish order block. There's a lot of different. This was a bearish breaker that should have been rejected, but it wasn't. So this could hold this. Yeah. So it's basically like very, 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 very bullish. And the only thing that I'm like explaining this, like the reason why I'm explaining this is because I didn't really understand it beforehand. Like years ago, I didn't know what to do in these situations. I was like, well, it's up so much, so I have to wait for a pullback, right? I have to wait until it comes back down like to 30,000 or 32,000, right? And like that's my initial response, yes. But then I go in to the lower time frames and I look for trade setups, and maybe I'll lose them. Maybe I'll lose a couple trade setups in the lower time frames. But if it looks bullish, and it does, and you get all of these bullish signs, then that's the only opportunity that you're going to have. You're not going to be able to get an entry on the daily. You're not going to be able to do it because it just moves too quickly. So that's when thinking on your feet and like getting really good at it like comes in handy, right? So yeah, that's Bitcoin. Like I just explained, I'll be in. I actually just bought it like right now because of this. So I bought this, but there's also Ethereum. So maybe Ethereum we don't know if Ethereum is going to outperform Bitcoin, but let's take a look at Ethereum against Bitcoin, and then we'll take a look at Ethereum against USD, and we'll see how that looks. Okay, so now let's take a look at Ethereum against Bitcoin, and we'll look at it on the monthly chart. You could see that Bitcoin just outperformed Ethereum by 17% last month. So yeah, Ethereum was not really good at all. And this was another thing that I was talking about. Look at this line. We had this huge line. Well, on the weekly, you could see it better. So let's go down to the weekly. But yeah, on the weekly time frame, you had this huge support, just trend line, bounce. Seemed like it was going to bounce off of here, plus all of these, support, deviation. It seemed like this was the area that it was going to bounce from, but it didn't. And luckily, like I learned this lesson, like you have to look for bullish price action, and there really was none. There was no bullish price action here. Look, we had this massive move down, very little wick, another massive, smaller move down, but still a little wick, another move down. This time right here was the only time where like it seemed like it was a possibility that it was going to actually, move up because it had a nice wick and on the 200 weekly moving average, but that didn't, it had this move up, but then it fell back down again. And like once it did that, it's like, okay, well that's, game over. Like there's no point anymore, in holding it, because it basically just retested the support that what should have been support as resistance, and now it fell back lower. So if I'm looking at Ethereum against Bitcoin, personally, I'm not liking it, like, because we have a downtrend, a consolidation, looks like a triangle, and then a downtrend, and then a pop up, and then another, but downtrend continuation, and now it looks like we're forming another triangle. So you can't really see it on the daily, but we're getting this long wick candle to the upside that swept the highs. That's not good. I do like this I was going to say all of this volume, but regardless, unless this comes back up above here, like I need this to come back up above here for me to get in, because it really just looks terrible if you take this and you just plot it out, you plot it out like that, right? Well, this closed below the line, it's below my line. It closed below the previous closes, and like the only thing the only saving grace is that it's above this close. Like this close is above this close, which is above this close. So, higher lows, which is great. But if we take the trend line and we draw a trend line instead of the horizontal, then it technically broke that trend line right there, which sucks. That's really, really bad. And if this is another triangle like the one from above, we basically had a fake out. And if we go down to the lower time frames, this is where it looks really bad. This is where it looks really bad, right? So look at this. You could bring this down. This stays the same, or comes to slightly up just to tag the close of the body, and it closed below it. If you do that, and this one would be like here, and I was gonna say, if this was going to be a true breakout, maybe it would retest here, or maybe it would retest this bullish order block right here. But it wouldn't. If this was a true breakout, there's no way. Not no way, but there's a low likelihood that it would come all the way down, crash all the way with an engulfing candle. It's a bearish engulfing candle with a fake breakout, so a fake out, close underneath the triangle in a downtrend, downtrend continuation after a break that's pretty close to the major support level, both diagonal and horizontal. So it doesn't look good, is what I'm going to say. It does not look good for Ethereum. So unless this pumps all the way back up, but then, that's something, if this does pump all the way back up here, then that's something that technical analysis can't do. You don't know if it just pumps up and pumps down and pumps up and down. That's just manipulation by the parties that be. But this is right now, technically speaking, looks bad. It looks really bad. If this was just a little candle and then or if it's like I said before, the stuff I said before, but it does not look good. In my opinion. So I sold my ETH for Bitcoin, and I'm fine with that. I'm going to just hold it. I'm just going to hold on to it. Now, do I guess I sort of I guess on the 1 hour, some of these things are good, but on the 4 hour, I just showed you, the 4 hour sucks. The 4 hour looks really bad, and the 4 hour is a higher time frame. So you want to use the higher time frames if you can, and even if we just draw the horizontals. So we have this horizontal resistance, and there was the red. Here we go. We got red right here. It popped up, and then this one couldn't even get above the previous one. Maybe if this came above the previous one, closed up here, and then fell all the way back down, down here, that would be fine. But it created a lower high, high, lower high, lower high. It's not, I don't like it. I don't like it at all. So I'm not in Ethereum against Bitcoin, but we'll still check Ethereum against USD just to see what it's doing, because for my account that I use perpetual for perps, my perp account basically, you can only trade USDT. You can't trade Bitcoin versus Ethereum. So in my spot account, I moved everything to Bitcoin, and I also have Doge because I'm waiting for Elon to come out with the X.com payment system, and I think that's going to pump Doge 30% in 1 hour. But in my spot account, I have that, and then in my perp account for my leverage trading, what do? I could trade Bitcoin. Yes, I did buy Bitcoin, but I could also buy Ethereum, because if Bitcoin is going to go up, which it looks like Bitcoin's going to go up, I just explained that, not this entire video, but for most of the video, right? Then Ethereum's going to go up too. So maybe Ethereum's not going to go up as much as Bitcoin, but if I could have a good trade set up on Bitcoin and I could have a good trade set up on Ethereum, why not take both? I could have both, and then just like basically have two trades, and does it reduce the risk? It doesn't amplify or reduce the risk at all, except for unless I load up too much, unless I have too much at stake. But if you take care of the equity amount that you put into it, then if you have more trades, it gives you better options to, or it gives you more opportunities, because sometimes one trade will go off, but the other trade won't, right? Very rare that happens, but like sometimes that happens. And so as long as you take care of the equity side and take care of your risk, you're only increasing the opportunities of something popping off. Of course, if you picked one trade setup, one coin, and that one, went off more than all the other ones, then yes, it would definitely, like, obviously you should have just done that. It would be better. But if you could find a really good setup on multiple different pairs, and maybe Ethereum won't go up as much as Bitcoin, but the percentage gain wise, but the risk reward is better on Ethereum. So you actually end up making more on Ethereum because you bet more. You were able to bet more on Ethereum because you saw a better trade setup. And so this is what I'm talking about. Like in my trading account, like this is what I do in my trading account. In my spot account, my long-term investment account, I just buy it. I just buy it and I hold it. And I care about getting in at good levels, but I don't do this like intricate, detailed stuff in those spot accounts. I just do this in my trading accounts. And I think you should have a bigger spot account than trading account, especially now, considering how bullish everything is, and the fact that maybe things won't come back down to really, really discounted levels. Maybe they will. You never know. But anyway, I've been talking too much. So looking at Ethereum, let's go back. Ethereum on the weekly. What do we have? Oh, I actually wrote all of this out. So looking at Ethereum, it looks really, really good. And this is why. Looking at it on the weekly level, obviously we had this nice trend line coming up here and a little fake out followed by the big move up. And what did we have? Well, we had the big move up. That this was the move. Was this? Not really. So basically, we had this move up before this move down that broke the market structure right here and right there, if you're counting the wick as well. And so this move became the bearish breaker. So technically, it should have just, like, if it stopped right here, it should have just kept on fucking going down. It should have just kept on going down, but it didn't. It bounced, and we had the sweep of the lows on the weekly time frame, and it bounced up here, and there we go. So wait, I literally explained this in the beginning of the video, so I'm not gonna re-explain this again. But pretty much Ethereum, when you look at the lower time frames, it's exactly like what I said. Well, it's what I said in the beginning. I want to stack orders in from here to here, and maybe this will be my average buy-in price. Who knows? Who knows if I'm even going to get it? Maybe I'll just tap here and then just like rocket up from there. But yeah, I explained this in the beginning, so you already know what Ethereum is. But yeah, this right here is the bearish, or is the bullish order block downward for that move that broke the market structure right there. So I'm looking to get in on this one and on and this one's the daily. So this is 12 hours, this is the daily. So somewhere between 1800 and 1830. And yeah, okay guys, so that's going to be my analysis for the markets. We went over the total levels of the total market cap, lots of money coming in. We went over the dollar. The dollar is looking really weak. We went over the S&P 500, which is finally turning around and looking pretty strong. We went over Bitcoin, which looks like it does not want to stop. We went over Ethereum, which looks like it is not looking good against Bitcoin, but it's also looking good against the dollar. So I'm gonna bid on Bitcoin and Ethereum. Also, I just noticed this too on Ethereum. If you take the top, it did just have a breakout. So this is also a really good breakout play. Normally I would never, I don't like breakouts at all. I hate doing breakout plays, but under these exceptions, with how bullish everything else looks, it's sort of like you gotta, like, you don't have to take it. You can do whatever you want. But this is definitely a play that I would want to take, is this breakout play. So you could see right there, finally we had the breakout and things are looking good. So with saying all of that, I'm gonna sign off. Please like this video if you watched it and it was helpful and you learned something. I tried to throw in some more educational stuff, some things that I learned along the way over the last few years about how to get into trades when things are going up only and you want the pullback, but you don't know. You're like, oh, well, maybe I'll just get in at the 61.8 because, or I'll get in at the support resistance, you know, of the daily or something like that. Like, it doesn't always work. So if you enjoyed this content, please give it a thumbs up, like, subscribe, leave a comment. I'm going to be posting a ton more videos and actually some really fire banging videos. These videos are gonna be so sick. They're coming out soon, so stay tuned for that. Turn on notifications and keep on making those gains. I'll see you in the next one.